Hi, Eric. How are you? So nice to see you.
It's good to see you. Thanks for having me on.
Well, we connected a while back and we had a fun conversation. And I told you that I have to have you on the show and talk about investing and your very unique path to investing. And we'll get to it in a minute. But before I hit record, we started talking about Omaha, about Berkshire. And we missed each other over there this year. But you went, and this was your first time. So I have to ask you, what was it like to be in Omaha for all the listeners that haven't been, have been dreaming about going? What's it like to go for the first time?
Sure. I mean, I imagine that a lot of your listeners probably have been. So I could probably ask them more questions about their experience in Omaha. But I think my experience was fantastic. I was fortunate to connect with new friends and see a lot of old friends. And what I realized was, in some ways, the event is not actually about going to see Warren. And unfortunately, this year, obviously, Miss Charlie, he
Hmm.
passed several months before, but that was only like a small sliver of the event. Investing is it can be a very solo sport, and
Hmm.
so being able to create a team atmosphere, I think, is really essential for being in this game for the long term. And so having a good support group, having good friends, having good relationships within this world is so beneficial. It's just wonderful to see people who have um, different types of investment views, philosophies, but everyone kind of connects over this annual pilgrimage, and
Hmm.
it's just super fun. It's just great to see people. There's no, unlike other conferences that you go to, there's no sales pitch. There's no,
Yeah.
everyone's just there to kind of have a good time and connect with one another. And so I totally got it. I get why people go every year, and I was fortunate to see some folks that um, I've been able to get to know via the internet and Twitter and phone calls and Zoom calls, but the first time meeting in person. So it was very special.
It's a small, big event. I think a lot of people are intimidated about coming because it's 50,000 or whatever it is, that the main event. But there are side events that are happening the few days before and the day after also. And they get very intimate. So you can actually even stand in the middle of the lobby of one of the hotels next to the convention and run into people that you know or that might know you. It gets very intimate, much more than the perception you might have of an event like this. And as you said, there's no agenda. Like a lot of events I used to go to, somebody would be selling something. Here, there's nothing really for sale. It's more of the idea of promoting certain principles, a certain philosophy, and respect for the shareholder and what investing could be about, ownership of businesses, and then connecting with people around it. Eric, I want to jump right in. And the first question I have that was on my mind after talking to you, if you can share with me the earliest memory of learning anything about money before we get into your career and everything that followed, but the earliest memory of anything about money, what was it?
Yeah. I think, well, first of all, I grew up right outside Manhattan in kind of a commuter town in New Jersey, about 20 minutes across the George Washington Bridge. My dad was an engineer. My mom was a school teacher. She taught high school English for 30 years. So I grew up maybe in proximity to a lot of wealth in Manhattan and saw that from an early age, but my upbringing was definitely more middle of the road. Um, I think my earliest memory of the tangible money was a PNC Bank's savings passbook. If I'm sure a lot of your listeners, this was probably the early '90s. You'd
Uh-huh.
get these little almost passport-like booklets for savings accounts, and they would go to the bank and they would tell you how much money you had, and then they would stamp it on the card. And I loved it. I just loved that thing because it wasn't physical cash because I didn't, I was too young to probably carry around cash. But I had this passbook that my parents had created for me, and it had a few $100s in it. But it was my earliest memories going to the bank with my dad, the excitement of getting that updated stamp because maybe that
Uh-huh.
account had accrued some interest. It was maybe a few cents, but it was very exciting to me that, oh, that account is growing. I have a little bit more money, and fantasizing about what toys I'd buy with it. So that's probably my earliest memory, of of money, but money was like a very, relevant topic in my family. And I think, some of your questions get to that, but I, I wish I still had that passbook, and I think a lot of people probably remember it from their childhood, but who knows where it went. It's probably long gone.
But the whole big concept of making money with money, that's what you're describing. It's a very powerful idea, right? Once you notice that you can make money in your sleep, and I think Buffett has this saying that you have to figure out a way to make money in your sleep. You were putting that money away and checking on it now and then. So you were thinking longer term, and then the money was working for you, wasn't it?
Yeah, now that you say it, I mean, I never really put that together, but yes, I mean, it was a very exciting cheat code for life very early on, which is I've done no work, and the only work has been the passage of time and not spending it. Spending it would mean that there would be less of it in little in that passbook. But you're absolutely right. I mean, I do remember pretty vividly waiting in the bank lobby, and they had some candies that I would get like a lollipop or something. And then they would stamp it, and the number would go up, even if by just a few cents, but it would certainly go up. And you're absolutely right. Yeah, there's some probably early seed to an interest in investing, which is how can you put $1 into something and get $2 out of it? That probably fascinated me from an early age.
So you are one of a few friends that I have that started their career in investigative journalism and then ended up in the investing world. So I'm seeing a pattern. Can you talk about it? The first experience of being a journalist and then finding your way to the investing world. How do they rhyme?
Yeah, it wasn't totally planned, is the truth. I went to college for both business and journalism, and really started my career as a business reporter. Not so much investigative early on, but just interviewing CEOs, interviewing investors, mostly venture capitalists, but some public market investors about their investments, about their strategy. One of the early questions that I was kind of fascinated by as a reporter, when I look back at my work from when I was in my early 20s, it was what companies are going to be successful, and I want to speak to those founders. I want to speak to those executives, because to me, business is just a reflection of culture and society and the motivations of humans, and business tells the story of the world, and so being a reporter gave me access to those people and to get to explore those stories. And as I progressed throughout my journalism career, I think probably there was a side to me that wanted to do a little bit more heavy-hitting stuff and more in-depth, more investigative work. And so I started really the first investigative type of reporting I did was on the private prison industry in the U.S. and looking at the businesses that operate within the prisons and jails throughout the United States, and kind of fascinating, a bit of a dark subject, but massive businesses based on the amount of prisons and jails throughout the country. And so a lot of these businesses stay off the public's radar, but are multi-billion-dollar businesses. And so I really was fascinated to get into how these businesses make money, what setting aside the ethics, what are the legalities of how these companies operate. My kind of focus, where I did a lot of work, was on the prison phone companies. Maybe some of your listeners probably have read a story or two about it can cost $15 to do a 10-minute phone call from a prison or jail, and there's monopolistic companies that own these systems, and they just gush cash, and now they're owned by private equity firms. And so I was really interested in kind of digging into the story behind these companies, how money is made, how money transfers through the system. And so there is a natural sort of segue into investing from there, which is as an investor, if you can figure out something maybe a little bit better than your peers, or a little faster, or have a more in-depth insight into something, you can turn that insight into a successful investment potentially. So I had always kind of thought about, well, I love this work. I really love getting into the stories of these companies, being involved, but the more I talked to venture capitalists and investors, I just thought that's a more fun way to have a lifestyle. You get to actually participate in a company's success, and certainly not
Sure.
on the more investigative side, but early in my mid 20s and late 20s, early 30s, I was writing about companies like Airbnb and Instagram, and companies that to me are really fascinating because they just grow really fast and have been incredibly successful in attracting users. And so I talked to more and more investors, and I started to kind of realize this was a field that this is where I want to transition to eventually. And then, like so many things in life, it was total luck or serendipity, and got a phone call from a guy named Arnie Allison and his team. And he was looking to bring on kind of a research analyst and someone to help him with some of his investments. He had read, at that time I was writing quite a bit about cloud computing. I had written a cover story on the company Box and Aaron Levy, which back then was private. It's now a public company. And Arnie is a unique guy. He founded the firm that I now work for, and wanted a differentiated research approach. Didn't necessarily want kind of a Wall Street type of analyst with that mentality. He already hired two guys with CFAs and had come from more of a traditional environment, but I think with my background as a journalist and my writing skills, was interested in potentially working together. So that was 2016. It's now 2024, and we've been working together since. I'm now the director of research, and I've loved it. It's been a fascinating journey.
Well, good for you. Congratulations. I'm thinking how with the work that you've done, it's the quality of questions that matter. I think you've gotten really good about asking questions, right? One thing is to find something, and the other thing is to ask questions. Can you talk about that? And I have some other questions about that, but I feel like, with AI that can find data for us, where do we really add value? And I realize it's how do we phrase the question? And even in conversations with clients, I manage money for wealthy families, and I realize it's the questions that are asked in the room that add the biggest value. We can get somewhere. But it takes time, experience, and a different perspective to ask the right question at the right time. Can you talk about the art of asking a question from your experience?
I think your question almost answers itself. It is an art. It's an art, not so much a science. I think so much of what you learn as a working reporter is, first of all, it's really hard to get people on the phone to talk.
Right.
And so once you get someone talking, I think the real art is not so much in the asking the question, but just actually listening and letting someone talk. I think what I often found myself doing early in my career was, okay, I have to figure out these are the 10 questions or the 15 questions, and I have to get these answered. And in reality, your questions may be totally off the mark. And so listening is way more important than actually asking the right questions. Listening to something that maybe surprises you when someone says something, and drilling and being willing to go off script. I think that in reporting versus investing, you tend to maybe see on the investing side, certainly in public investings, when you're listening to like an earnings call, a lot of the questions are a little bit off the shelf, right? I mean, they're from the sell side analyst, which just certainly makes sense. But I think when I think about doing research and asking questions, you can get an insight from anyone. You can, if you talk to maybe just a customer of a business and just start asking them just some basic questions about their experience with the business, just letting them talk. Something I learned early on is being comfortable with silence in an interview. And maybe to your question about AI, I'm not sure that AI has yet to develop that skill. AI is very efficient. It's very it's very by the book. It gathers data and it quickly spits it out. Creating a good interview atmosphere, both investing and in reporting, I think requires this ability to just ask a question and then let someone say something and then just sit there in silence And then more often than not, that person will feel compelled to talk a bit more,
Mm-hmm.
and then talk a bit more, and then the truth starts coming out. I think, one other point is having interviewed probably a couple hundred, if not 1,000 CEO founders types,
Mm-hmm.
you realize pretty early on that they stick to the script.
Right.
They're media trained. They have answers really kind of prepared in advance, which
Mm-hmm.
is absolutely what they should do. But getting people into environments where they're maybe a little bit more relaxed, where they're willing to speak off the cuff. So one of my reporting tactics or just methods was, instead of necessarily always doing an interview in someone's office or over the phone,
Mm-hmm.
let's go take a walk, or
Yep.
let's go do something that you enjoy doing. And you'll
Mm-hmm.
see this in good magazine journalism, just good reporting in general, is you get that person into an area of comfort, and so it's not just the questions that you're asking, but it's also about the environment that they're in. Just as if you're talking to a CEO on an earnings call, they're going to be way more buttoned up than if you happen to be able to have a coffee with them, at a Starbucks or a local coffee shop, or if you somehow get access and you're able just to go to walk through a park with them. So the environment matters quite a bit in which you're asking the questions.
To me, it sounds like it gives you a chance to get to know the person, the actual person, how they think, how they operate, how they make decisions, right? Beyond the official script. And it's not that you're going to hear something that's that they shouldn't have shared. I think it's just getting the flavor for who is really in charge, how do you operate? And I think in those moments, you can really get a feel for it. I think these days we're really blessed because we get to know leaders of various companies through podcast interviews, among other. But a TV interview is always very short, it's very brief, it's very structured. I never really thought that I'm getting much out of it. But if I have a CEO of a company I'm interested in for a 2-hour podcast interview, and I get to listen, I go for a walk and then I listen to them and I actually pay attention, I think I get to know somebody who's running the business. And investing is really entrusting the capital to whoever's running the business, and hopefully they're on the same page with you and they think like you do. I like what I'm hearing, and I want to take it a step further. And you and I had a conversation a few months ago, and one of the notes I made that got me thinking really more about it, how, these days we get earnings transcripts. We can read through real quick what the management said after each earnings, good or bad, and so on. The market reacts. But you told me something that really resonated with me, that you want to hear how somebody said it. And it's something I can relate to because it's something I do. I read the transcript and then I zoom in and I want to hear, how did they say that part? Because you can say things in different ways, right? Like the intonation, there's so much of the communication that's nonverbal, even if you're using words. Can you talk about that with your experience, that you can actually feel, is it even true what they're telling you?
Yeah, I think something that your listeners will probably be familiar with is if you hear someone ask a question, it doesn't necessarily need to be on an earnings call, but a question is asked, maybe a pointed question, a very specific question, and there's a long pause, and you could tell that maybe that they've gone on mute and they're trying to decide how to answer, and the CFO and the CEO are looking at each other and trying to think, okay, what? That doesn't come through if you just read the transcript, right?
No.
It just shows up as they answered the question, and you don't get a sense of that, what's the term, like a pregnant pause.
Uh-huh.
And those pauses can, I think, they don't necessarily mean anything, right? That one of the things that I think I've experienced is you can maybe read in too much to these types of pauses or intonation, and it can potentially lead you astray. On balance, though, I do think listening with your own ears, and ideally seeing with your own eyes. I mean, some companies now do live earnings calls via video, and I think that's great. And to your point, I think more and more CEOs and C-suite level people at even large companies are willing to do long form podcasts, which again, you can read the transcript or you can listen to it. Ideally, I think if you're interested in a company and you're interested to get to know management, you just do both. You listen and then you read, and maybe you find that there's something that came up in the written transcript that you didn't actually hear when you listened, and vice versa. Maybe something that you heard that that you didn't read. So I think that at the end of the day, like, we're just human, right? And so AI will be vastly more capable than us on so many areas. But there's still a few areas where we have an edge, just a few. I think, I think, eventually when there's full AGI and there's, humanoid robots that can read body language and can listen, and absolutely, I think eventually maybe they're going to be better than us. But we've got a few years at least, and
Good.
and so I think. And so listening and picking up on body language, picking up on small subtleties, like just a pause in a conversation, or maybe someone reacts to a question negatively, and you could hear a bit of anger in their voice. And what does that tell you? How they're feeling about it? Maybe they're just having a bad day, or maybe the analyst has really hit on something that that warrants further investigation. So. I think my background in journalism, I've just sat through so many interviews with CEOs where I can tell, okay, this is just a scripted thing that they're saying. How can I ask a question to kind of loosen them up a little bit so that they feel more comfortable, and I can really kind of get to the core of it. Obviously, with public market investing, you're limited. You don't have access. And there's only certain questions that you can ask, and certainly that can be answered. But a lot of I think just basic research is listening, picking up on some cues that may not come through just if you read an earnings call. But it's hard work, and it takes a long time, and there's no guarantee that any of this information is going to be helpful. But it's all part of the mosaic of research that if you have the time and you have the desire, I think that it's an accretive process for your inputs and your overall research process to actually try to listen, actually try to watch, and really try to get inside the heads of the people leading these companies. Because exactly to your point, you're entrusting these people with your capital, and at the end of the day, we're just shareholders and investors, and they're the ones operating and executing. So. We have to trust them that they're going to do what they say they do, and it's complex.
I like them to under-promise and over-deliver if they can, when they communicate, and reading transcripts is helpful, and reading all the filings is helpful, but I always want to hear the voice, and I think with time, I've been doing it for 20 years, I grew to appreciate those intangible moments, qualitative moments. And I think it adds up. It accumulates over time when you're making a decision and you build your conviction around an idea. And on a normal day, normal week, normal year, it doesn't matter. But there are moments when you will be tested. And that's a given in investing. And the market will be down, or your stock will be down. And these are the elements. It's not the filing, it's not the numbers, but that intuition that these people are doing the right thing at the right time, and I trust them, will allow you to hold on to the shares through the hard time. That's been my experience. And I think that's something you can't earn just by reading an annual report back to back. I want to hear them. If I can't see them, I want to hear them. And it gives me some more confidence that I know who I'm dealing with, and I know what I can expect of them. And that's, on a human level, I think it's very powerful. I like this idea that the language is 50,000 years old or so, but we communicated with each other before, organized as a society and hunted together and, collected berries. And all the way to today, I think, the words are very powerful. But I think what you're tapping into by being present and actually listening is that underlying element of trust. Munger talks about this, seamless web of trust. That trust takes time to develop and acknowledge and see, right? And if we can trust the people who are running the businesses that we invest in, it's a very powerful idea. On the other side, I continuously earn the trust of clients whose money I manage, and I respect that too. So there's trust on both sides, and it doesn't happen all with just the written word. There's a lot of human-to-human interaction. Eric, I want to ask you about your writing these days, about your newsletter. Can you talk about it and how it came about? What's it about? Let's introduce the audience to it.
Sure. Yeah, I write a weekly newsletter. It's called the Nightcrawler. I send it out every Friday, and it's a compilation of articles and essays about investing, technology, that I find interesting and that make me think, and that I'm just curious about. I think the genesis of the newsletter, actually going back several years, was for our own team internally, used to just send a compilation of articles every week to the team, and it was just called like an internal digest, and it was maybe 10 or 15 articles, and I'd collate them and just create like a little booklet, and then it would be weekend reading for our team. And at some point about 3 years ago, I just thought, this would be great for our clients, just to see what I'm reading, and put a little context around each article, why I find it interesting, whether it's about just a speech that was given about long-term investing, or a specific piece on technology that I think is compelling, and I just started publishing it, mostly to our clients to begin with, and then put a sign-up form on our website, and it's now several thousand readers. And I love doing it. I think it's super fun for me because I'm reading this stuff anyway. And one of the central problems of the internet is that there's just too much information. And
Sure.
I think all of your listeners will absolutely feel this, which is that there's just too much stuff. And most of that stuff on the internet is not worth your time, and it's not high quality. And so in an age of just completely abundant information, curation actually becomes really important. Curation is probably a skill that AI has yet to really cultivate, because I think it's still a human centric idea of taste and individual curiosity, and so I just put together a few articles each week, write a little bit about them, and send them out to the distribution list. And it's obviously free, and send every Friday evening. Our firm name is Nightview Capital, so I thought Nightcrawler kind of I send it out at night. I try to have fun with it. I try to feature work that I think is really exceptional, and what's been really great about it is I've just gotten to know people through it. By featuring their work, I usually just shoot them a quick note and say, hey, love that piece that you wrote, or that interview that you did, and I'm linking to it tonight in the Nightcrawler. And it's been just a fantastic way to get to know other people in the investment community and just the business community at large. So I appreciate the plug. You can sign up on the site, but it's super fun, and I plan to continue doing it for as long as they let me.
I want to bring up some of the topics that you tackle in the newsletter in a moment, but when you and I spoke a few months ago, we talked about learning in public. And I don't know if you remember that, but it really resonated with me, and I'm kind of almost unaware of it, that a lot of the work that I do, so I manage money for families, but then I write, and it really helps me organize my thoughts. I post articles, and I've been posting them for almost 10 years. And then I wrote books, and it is a way, it's vulnerable, it's humbling to share your work with other people. Your opinions are subject to change, and you're subject to change. And obviously anything you post can cut both ways. I told somebody on the podcast, I think it was Chris Mayer, how I see it as a flare that you send out to the sky. Kind of like I have Tom Hanks' Castaway in my mind, you shoot it up to the sky, you don't know who's going to see it. And I think that's how you look at it. You don't know who's reading, and people reach out and react to the work that you do. And I would say that it's overwhelmingly more positive than anything else, that people respond to it and you connect over different topics and you make friends and you build a network. So, but it is a very humbling and vulnerable experience to share your work out there. How do you feel about it? You open yourself up to
Yeah.
potential?
Well, I guess the context is, I started my career by just having to publish constantly.
Yeah.
At one point in my career, I was writing like one or two articles a day,
Wow.
and so I I think that there's just some. It feels more natural to me to put thoughts out there, and yeah, you and I think of it very similarly. It's a beacon. Your learning in public, I think, is increasingly becoming standard for our industry. I talk about this with our research analysts quite a bit, which is putting thoughts out there, putting our research out there will only it will the value will accrue to us over time because
Hmm.
you will get feedback on those ideas, you will make new connections, and it forces you. It's writing publicly is just a force function for curating your own ideas and your own thinking. And I very much believe that you really can't have good thoughts without writing and writing effectively and editing. Um, Editing a story is a way to, or editing a memo, editing an article is a way to actually come up with the idea.
Hmm.
It's not the other way. The idea doesn't come to you and then you write it. I think you
Hmm.
start writing and then the idea comes through the writing. And when you, I think, go through like the school system, that it kind of taught to you the opposite. Like you have to have a great idea and then you write out the idea.
Right.
I think the point is you write and the ideas come through,
Hmm.
and doing it publicly and having, I think, the accountability of a deadline, of a publishing schedule,
Hmm.
of an audience, is a really powerful mechanism to become a better thinker, become a better investor. It keeps you sharp.
Hmm.
Uh, yeah, I think if you were just to slink away and do the work all by yourself and never have to interact with the world, I think that there's a good chance that you atrophy.
Hmm.
And and so I just look at it like, on behalf of myself, my own desire to keep learning, and Charlie obviously talks about just this idea of continuous learning. That I totally believe it. I think it's the ultimate joy in life is to be able to just keep learning, and but it's really the benefits accrue, I'm sure, to your clients, and
Hmm.
how I think about our own firm is, it's just keep learning in public. Um, Keep putting up the thoughts, because inevitably you're going to have to improve, and if you don't improve, someone in the comment section will tell you how you should improve. So there's always that. I mean,
Uh-huh.
yeah, there's a peanut gallery,
Uh-huh.
and that's okay. There should be. If everyone was just super nice all the time, I don't actually think it would help anyone. So yeah, I think my background, having written lots of articles where there were plenty of negative comments or disagreeing viewpoints, I suppose maybe I have a bit of a thicker skin than maybe others.
Uh-huh.
Um, but I think you hit the nail on the head. You're putting up a flare, and you attract the right people.
Uh-huh. No, it's really remarkable what happened. Somebody asked me if I had to choose between investing, podcasting, and writing, and I said I can't choose because they coexist in my head at the same time. This morning I had a long conversation with a client. We're solving some problem, and it's on my mind, and we're working through it. But it will inspire an article. Obviously, it would be in very general terms what we were talking about, but I think it's something that other clients or other people could also benefit from. It will come up in conversations in this podcast, I'm sure, in some way as well. So my mind is active in that way, that it's continuously looking for a better answer, or maybe a better way to frame the problem. But the three pieces feed on each other, and something that I hear in one of the conversations in the podcast leads to an article that leads to something that I can do for a client. And it happily coexists, and because it's open in so many ways, it continues to grow, it continues to challenge me, and I have a lot of fun with it. And as you said, if I had to close myself in a cabin in the woods and never talk to anybody again, I think I would have missed out, and my clients would have missed out, and everybody in my life would have missed out on so much that this experience, as vulnerable and humbling as it is, offers as well. Eric, let's jump into some of the topics that really stood out to me reading your writing. one of the things that you write about is negativity, groupthink, and our evolutionary baggage. And the reason why I like that point is I wrote in one of my books that we're wired to fail with money. I have this belief. Talk to me about negativity, groupthink, and our evolutionary baggage. How do they get in the way of what we're trying to accomplish?
Yeah, I mean, full disclosure, I'm not a sociologist or anthropologist and haven't studied evolutionary biology, but I think we all kind of intuitively know that our brains are wired to fear, the tiger that's circling the community that we live in, and so it's out of self-protection that ultimately fear has a purpose. There's a survival mechanism that we've been programmed with to avoid things that might harm us. And when I think about just groupthink, negativity in general, especially in the media ecosystem that we live in, because I think it's very much relevant to investing today, it's very easy to become scared, to become confused, and ultimately, when it comes to investing, I think people can be scared off to the sidelines, right? And I mean, how many stories are there about, if you missed X amount of days of being invested in the market, you would have missed out on Y returns. But that really matters. And I think for having a long-term mindset to be able to actually play this long game that you and I are both trying to play, I think you have to develop a skill set or just a mindset to accept the fact that there is uncertainty, accept the fact that there are participants in this game that we play that are going to stoke fear, and ultimately just choose to stay focused on what we think matters. And it's very hard. I think it's probably the hardest thing in the game that we play is not being led into the groupthink, mindshare negativity that is very seductive, because I think we're just programmed that having that mindset is it's almost like a proxy for safety. So safety, I think, as we're programmed, is yes, being cynical, being negative. There's a great quote by, I think, Nat Friedman, the founder of GitHub, and he says, "Pessimists sound smart, optimists make money." And I always love that quote because it's so true. It's so easy to sound smart when you're pessimistic, when you're predicting the end of something, when you're cynical, and it can be interpreted as very naive or shallow to be optimistic. But if you just look at the long track record of the system is resilient. The market goes up over the long periods. Like there doesn't seem to me to be a reason to be too scared about these catastrophic things that very often get thrown into the mix, whether it's war or a new political regime is going to change everything. So I think just staying focused on what you really believe is kind of a key part of this game, and it's a skill that I'm still cultivating. I think we all cultivate it over time. I'm not immune to any of the fears that get thrown around in the news, or what if this happens, but at some point, maybe it's just through practicing meditation or trying to remain just present, is you let those kind of fears subside, and kind of however anyone does it, whether it's through breath work or going for a walk in nature. The key is to develop a system to enable you to not be sucked into that vortex of fear.
There's so many things that come to mind listening to you, but I think big picture is that we overestimate the impact of the short term and we underestimate the benefit of the long term. And I think it's a big idea in my head how, I think we might believe that we're going to do so much done in a day, for example, but we don't even imagine how much we could do in a decade. And we look at a piece of news that is affecting the short term and we think, oh, this is the end of the world. And then would it really matter 10 years from now? And there are those concepts of long shelf life of an piece of news or information. If you pause for a second and somebody shared something with you today and you think to yourself, honestly, do you think I will even remember this 5 years from now or 10 years from now? I think it's a good filter. And you realize, I don't think so. I don't think it will even matter. But it's very hard to make that judgment in the moment, what is really important and how it affects our decision making. And back to one of the points that you raised, I think it's become so easy to act on your impulses in so many different ways, both as a shopper and I think as an investor, right? So shopper, spender, and an investor. If you feel like you have to buy this thing, before you would have to, worst case, get in the car, drive somewhere, look for it, they have it, they don't have it, they have to order it, it's not in the right size, and so on. And you could change your mind as you go. Do I actually need it? Do I have room for it? It's an appliance in the kitchen, I might not buy it. But now you order it and it's in your house before you get home. So that's easy. And I think with investing, people have apps and they see their portfolios and they see them live throughout the day. It's very tempting to act on a lot of short-term impulses. And it's just a click away and you sell something. So I think, going to Omaha, it's for me a great reminder that investing is ownership of businesses, which means that day to day, they're not for sale. I bought them to own them, right? And I think if you can create some sort of barriers for yourself so that you can't easily act on your impulses, I think that helps in investing. And I like the idea of walks and everything else that you mentioned. I think just slow down a little bit. Going slow, it's very helpful.
I have a joke with my colleagues that my ultimate dream one day is that the market will just be open one day a year. So everyone, because right now, it's open 5 days a week. Well, and there's even talks about making it open more. But ideally, in my perfect world, the market's open one day a year. You spend 364 days thinking about stuff, and then one day to make the trade. And because I think it's your point is exactly right. I have a 3-year-old daughter, and we're trying to teach patience right now. And sometimes I think she has more patience than some investors I see in the market, because it's the whole ecosystem that's been created for us. It's the 24-hour news cycle. It's the fact that exchanges are open, pretty much all the time. That there's the availability of information, that there's the availability of trading, and so that availability exists really to benefit people that are not you, right? The information that goes across the wires, that's to sell advertising, right? That's not to make you a better investor. Your brokerage account, them doing more trades does not necessarily benefit you, but it certainly benefits them, right? And so recognizing these things is that they're the business model around them, the business model that's been erected around the whole investment ecosystem is very often not geared for a long-term investor whose best action is typically to do nothing in their account. But there's a lot of other actors in this web of a business that we've created for ourselves, and so just recognizing that, calling it what it is. I worked in media. The news that is put out is just, it's not there to make you a smarter thinker or a better investor. It's just not. It's there to attract attention. And I think that there's certainly an argument that certain publications or certain reporters are more inclined to tell stories that really matter. But ultimately, what gets a lot of attention is not necessarily what really matters. And that's to your point around, will this thing matter in 3 years, 5 years, 10 years? What's the shelf life of this news or information? Very often, it's not material, and yet in the moment it feels so urgent because it's given that such prominence on a web page, or it's emailed to you directly as breaking news. So we live in a very just fuzzy ecosystem where we're bombarded with information constantly, and I think just learning how to accept that. I think that before you can even filter it, you just have to recognize it and just accept it. We live in an attention economy. There's so many business models that are built to try to get our attention, and being just accepting that, and then trying to create a process to be more focused in the work that we do, and filter out what ultimately, 99% of the time will be noise and not signal.
I think a key word is patience, and the more impatient the world becomes, the more we stand out. We don't have to really change. We can just stay the way we are, and the world around us is getting more impatient. I like the idea of the market being open once a week, but at the same time, Eric, I'm thinking that the beauty of the public market is that I get to buy things at prices that I wouldn't get in the private market. And I can explain it real quick. Like, the idea is to own businesses. That's my goal. I want to have a portfolio of 30, 50 businesses at any given time, a long-term view, infinite investment horizon with the family wealth that I manage. But the public market offers this incredible opportunity because the group thing that you mentioned and the crowd thinking and all that leads to a panic at times and time. Well, enthusiasm at times and greed and all that, but also a panic at times. So you could buy a business, half off just because the crowd panicked over some short-lived issue that the company is going through. A couple of missed earnings, a product launch that got delayed, I don't know, management change, whatever it is. And the focus is on the short term. The stock is down 50%. In the private market, if you had a family own this business and they're going through a hiccup, in their mind, the value of the company is not half off. No, they continue with the business. They go on. They might take out another loan or whatever it is that they need, but they're not in the market to sell it. But in the public market, it's such an anonymous mechanism, structure, institution where we all panic together. And if you can be the one that's patient and waiting, you can buy some incredible businesses half off. Not necessarily when the whole market sells out, but individually at any given time. I could give you a list today of stocks that are 40% off in the market that's trading very close to an all-time high. That's where you'll find me looking. I'm looking for quality, but I want to buy it when it's down cheap and out of favor. And I jokingly say that I might not be smarter and faster than an average investor, but I'm definitely trying to do what seemingly your daughter already embraced, which is I'm trying to be more patient than most of the people.
She certainly hasn't embraced it completely. It's relative to some, but I think you're right. If suddenly the market was only open once a year, I think we'd actually all be out of a job because things would be probably more efficient. And so
it would be too rational,
right.
too rational and too
collective.
Too
rational. Yeah. And so without that rationality, that's where the opportunity exists. So as frustrating as it can be, you're exactly right. The psychology of the behavioral psychology of the market at large is what creates inefficiencies, and it is what creates opportunity for investors with an appetite for to outperform and to really think long term. It is frustrating though when things get irrational, right? And I think you and I are probably fairly rational people, and we see a lot of irrational things, and it's frustrating. But yes, having patience and just clarity and focus. I increasingly think focus is probably one of the predominant key traits of investing today. It's so easy to get distracted and to be multitasking and have 30 tabs open on your browser, which I certainly am guilty of. But there's so much value. There's a great writer, Cal Newport, who's written a couple of books about deep work and focus, and he's absolutely right, which is being able to do deep work, deep focus is what enables you to have exceptional returns over a long time period, whether it's in investing or in another field completely, whether you're a writer or an artist, or you worked in software development, but just being able to focus on one thing at a time. I think in the 70s and 80s and 90s, multitasking was the idea that was very popular. And I think that's reverting back to singular tasking. And We'll see. I think also AI is helping us on that front. You know, by being able to maybe outsource tasks that are less important, and we can focus on what matters. But it's a bit of a tangent. But I think focus and patience are hand in hand in my mind.
No, I love the sound of that. Earlier today, I was having a deep conversation with a friend, and I said how, when I schedule my week, I have Monday and Friday usually with no commitments unless it's an emergency and I have to be a part of something. And I want to have an open-ended day when I can dive in and get completely lost in whatever research or writing or anything I'm doing. And I need those hours because I have to know that I won't be interrupted. And I've seen a lot of people, accomplished people, highlight that this is an important thing in their life. You talk about Cal Newport and deep work. I think it's a secret that's not a secret. And maybe it's so important that we don't even bring it up, but I think it's so significant in our everyday pursuit, especially if you want to go deeper, that you need to have an open-ended time where I might be working on this for an hour, or you might not see me for 6 hours. I'll be still digging and looking for something just to find a little bit more conviction to act on an investment idea, for example. But I need to know that nobody will interrupt me today. And that's when the magic happens. Eric, I want to ask you about something that really stood out in your writing. You talk about 3 things: the importance of inaction, the search for generational winners, and pursuing asymmetry in life and investing. I see it as a bigger idea emerging behind this triangle. Can you talk about those?
I can try to. I think what I'm interested in is in just in general finding outlier opportunities.
Mm-hmm.
And when you look at kind of the history of markets, there's actually very few companies that have been huge generational winners, right? I mean, the vast majority of market returns are generated by just a handful of companies. And so that both presents challenges and I think opportunities about identifying these types of real big long-term winners. And so how do you set up a system that enables you to think about that quite a bit? And so it's a bit of an open-ended, research question for us and myself as a firm is how do you identify these? What do they look like? So we spend a lot of time just kind of studying them, looking at what it means to outperform over the long term. A concept that I've been thinking about quite a bit lately is resilience in business. Right now, in the last 100 years or so, there's quite a bit of focus on growth as an indicator of value, and there's no doubt. If something's growing 30% a year, that's impressive, especially at scale. But I think a lot about companies that have been able to withstand multiple shocks to the system. So if you're really investing for the long term, in some ways more than growth, you should be interested in resiliency. And does an organization have the ability to stay resilient over time and actually ride out the inevitable challenges of war, of product changes, of technological changes, of whatever might hit that company at that point in time. I was studying this Japanese construction firm that's been around for 1,400 years because it's like one of the oldest businesses in the world, if not the oldest business. And I just think it's a fascinating question. It's, in terms of finding these outlier companies, what are the key traits? Obviously, growth is part of the equation, but increasingly, I'm interested in the idea of resiliency and what it takes to withstand the inevitable ups and downs that these businesses encounter. And so, just some initial observations is it's a lot about culture within an organization. It's a lot about leadership. It's a lot about flexibility and adaptability. Nintendo is a great company. It's now, it's a public company now, but many people might not know that the company actually started in the late 1800s as a Japanese playing card company and just evolved over time. So when I'm thinking about finding generational winners, it's almost like, how do you find generational evolvers? How do you find
Mm-hmm.
companies that can evolve over time? Uh, that to me is really like fascinating. And I think if you look even modern companies that have been able to just evolve over time, the
Mm-hmm.
big tech companies, what how they started in the late 90s look very different from how they are today in terms
It's
of
true.
how they generate revenue, their product lines. And
Mm-hmm.
so I increasingly think of resiliency, of adaptability, flexibility, evolution as being key traits of successful companies going forward. And that doesn't, that there's no line item for that on a 10K. It's not, there's not like a quotient for resiliency. So the work that I'm interested in from a research perspective is, well, how do you, A, studying these companies,
Mm-hmm.
and B, what it means for leadership at companies today. How do you instill some of those ideas of culture and adaptability that have kept Nintendo alive, that have kept some of these, 100 plus year old companies, how they keep going, and then um, applying that today. So that's a long-winded answer, but hopefully, kind of speaks to what I'm interested in terms of finding these outlier opportunities.
No, I love what I'm hearing, and it's fascinating because we see the world today as it's changing so much, right? Businesses will come and go. The S&P 500 of today, it's a very different than the S&P of 500 of 20 years ago when I started as a professional investor. And I can only imagine that 20 years from now it will be also a different S&P 500 with some new companies I can't even think of, which gets me excited. I find it fascinating that there will be new businesses for us to invest in, and new profit pools and new opportunities. But you're right, finding a business that it's not, I think there are two things about it, right? So you can find a business that's in an industry that's itself subject to limited change. And immediately what comes to mind is confectionery, chocolate, but also alcohol and beer companies. But that's one way to survive. And some of those businesses might have family ownership and so on that allows them to think long term. But the other thing that you point out is that these companies changed, they evolved, and they became something new. And Nintendo is an incredible story, as you brought up. And they were able to reinvent themselves, which is a huge ask, because if you have a business that's working very well with good margins, good returns, to take a huge risk, really, and think of yourself as a different business, it's more of an exception than a rule. So to study those, I think it's fascinating. I want to bring up Buffett for one simple reason here, is that Buffett took over a big textile mill operation that was a failing industry with a secular decline and so on. But he had no emotional ties to this business, right? If he was a family member, he would want to make better shirts and on because his grandfather made shirts. He had none of that. He was looking at it as a capital allocator. And I think the businesses you talk about, they have to dance between staying in some sort of the same field, card games, all the way to Nintendo, different kinds of games, but also finding a way to reallocate capital in new places and in new ways, which is a challenge every time around. But having that open mind that you might not be making shirts forever, you might be doing something else. I think that's a huge ask, and if a business can do it, I think that's fascinating to see. Can you talk about the asymmetry in life and investing? That's a concept that really got my attention. How do you think about
Sure.
it?
Yeah, I think that in order to, from what I've observed of investors who have been really successful over time, they've set up their life to to be able to achieve that success in investing, and they're linked inevitably.
Mm-hmm.
So I think longevity is a really important characteristic of finding that asymmetry. So just living both a lifestyle that enables you to achieve returns over many years, and so having just a healthy attitude towards life, being kind of mindful about physical health, mental health. It goes hand in hand with investing for the long term.
Mm-hmm.
It's not a subject that maybe gets talked about quite a lot in our industry. I think our industry tends to focus on the more quantitative aspect of things, and it tends to be a bit more buttoned up. But it's a really hard business to do for the long term, because it can be very challenging at times, and there's ups and downs. And so building in um, uh, that framework within your own life. And for me, that's just, being present, being close with my family. I have a young family, and spending family time is equally important as work. It can be very easy to just spend all your time work now, especially that we have computers in our pocket 24/7 and can access markets. But very much, being mindful about uh, our lifestyle as a way to, because it's just important, and you live a more happy and healthy and successful life by having these systems in place.
Hmm.
But it's also a benefit for the business and for the firm and clients to have a more healthy approach. And I think that's incredibly important. I wish that there was more dialogue about this in the investment community, because you often hear about it when it's something negative. Someone,
Sure.
it tends to only be so. So I think lifestyle and just overall wellness
Hmm.
is a really important idea to cultivate and to think about as an investor, because you inevitably face these pockets of challenging times, but having a system, a framework, a lifestyle in place that enables you to live a more, um, you know, a life that's built around longevity, it's incredibly important. And so that's kind of what you know, in my writing, when I talk about asymmetry in life and investing, it's just trying to be mindful about
Hmm.
being being thoughtful about longevity, and structuring time to really kind of live a peaceful, long-term, happy life, and the rest will flow in the investing side.
I like that idea, and it makes me think of maximizing for one output instead of thinking about the whole picture. And I think it's both in life and in investing. You could be thinking, what's the highest return I can possibly get in the next 12 months? It's a different question than thinking, what's a sustainable rate of return I could keep and reproduce, some sort of a range over the next 50 years, right? And it's a
Yep.
very different question and a different mindset. And you talk in your writing also about thinking in terms of decades, which I really like. And that's how my clients think, how can we take advantage of the decades to come? Because once you have the capital, the rate of return doesn't have to be excessively high. You can take your time. I could keep you here all day, but I want to ask you one big question at the end about success. Eric, how do you think about success? How do you know? Is it a destination? Is it a journey? How do you know you're on the right track?
It's a it's the question. It's such a fundamental question. There's a concept in Judaism. I'm Jewish and grew up familiar with these concepts called tikkun olam, which
Hmm.
kind of technically means a broken world. And when I think about success, I think we live in a very a world that has a lot of problems, and so a
Hmm.
successful life would be very simply to try to spend your life trying to fix some of these problems. And so that can be both personal within a family, and as far as this business that we're both in, I think it's a pretty sacred job. I think that I grew up with pretty like a reverence for money,
Hmm.
reverence for it because of how important it is to live a lifestyle that is safe and gets you access to the things that you need. And so success for me would be also just trying to do right by our clients over the long term,
Hmm.
and be successful in this path of investing successfully, doing it sustainably, in a resilient manner, and outside of the investing component, just living a lifestyle that maybe in a very small way fixes a very broken world, and teaching my kids about those concepts, and hopefully they'll be better at that than I am, and but creating that as part of our family life. So it's there's there's so many elements of what success could mean. I'm sure my definition will change over time. But it's a great question. How do you think about success? What can you tell me?
Well, I didn't expect that, but I think it's been an evolving idea of what it is, and it feels more like a journey. And I'm trying to be a bit smarter, a bit better every day, and I'm trying to live a life of service. I grew up in a household with 2 doctors, physicians who are saving lives, and I have this idea that stewardship of capital, what we do, it's a higher calling, and there's nothing else I would rather do. I have to do it. It's my life. I wake up thinking about it in a good way. I'm creative, optimistic, and I look for ideas and solutions for problems, and I feel like I see how the money has meaning in people's lives, and I appreciate the work I get to do because on one hand, I know the businesses I own. On the other hand, I know the clients whose money I manage. There's no middleman. There's no allocator. There's nobody in between. I actually take the calls from people whose money I manage, the money that will make a difference in their life. And even if that money is not spent or used, the fact that it's sitting there has a big importance on their everyday decisions. Career decisions, life decisions, kids taking a gap year or not, or you accepting a particular position or not, or pursuing a career that might not be financially beneficial, but you have other means that will allow you to live a good life. It's such a powerful concept and such a huge responsibility if you take it seriously. So I feel very blessed that I get to do it in this life, and I'm having fun with it. I enjoy it. It's an never-ending learning pursuit and very intellectually stimulating. I get to talk to people like you about your experience and fill in the little gaps that I have in my understanding of the world. So that's my definition of success, waking up excited about the day and then falling asleep thinking about what's next. And it's been the story for the last, 20 some years of my professional experience, and I hope it stays that way. And I love that it continues to change and challenge me and all of us in so many ways, that it's not static. It's a very dynamic way of looking at the world. So that's my quick answer on the spot since you called me out.
Well, thank you. I know it was unplanned, but I benefit from it, so thank you.
No, I appreciate it. Eric, this was wonderful. I highly recommend your writing in your newsletter. I'll mention it in the notes, and people can look you up. And you just have a way of finding sources that are inspiring and thoughtful. And I think it's a wonderful shortcut and benefit for all of us that are looking around, what else should I be reading? And to have somebody like you in our life that does so much of the work for us. So thank you for doing it and being so generous and sharing it, not just saving it somewhere on your drive, but sending it out to the world and learning in public as we all are trying to do.
Well, I appreciate that, and thank you.
Eric, thank you so much for today. I really appreciate it.
Likewise. This was great. Thank you.